Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. Alright guys, let's hop into the charts. And before we do the top-down analysis, I want to start off here in the 4-hour chart. And I just wanted to show you how this falling wedge played out. This was a play that I traded and it worked out perfectly. So initially I did this flag on the 4-hour chart. We broke out of the flag a little bit and I had drawn another flag here, but then we started dipping down and I thought we probably were going to get back into this flag, and this started looking to me like a falling wedge. So I switched this upper flag here into a falling wedge and we had the measured move going all the way to 98,000. So I retraced it back and I'm going to play the play button, and as you can see, everything stayed in track inside of that falling wedge, and eventually we were to break out almost exactly to the measured move of 98,000. I think we were short maybe by like $100 or like $150. So again, this is why I love technical analysis, because if we learn to read the candles, we flex the moves. So we ended up going all the way to 97,000, basically 97,800. The measured move doesn't mean that we're going to fill out that whole measured move. It's good to always take profits beforehand just in case. So if anyone took that trade, we were in profits there. So now I'm going to take out this falling wedge because it already played out. There's no reason to have that there anymore. We already made the trade that we needed to make, and we're going to come back to this flag. So let's start off now with the weekly. And with the weekly chart here, again, we're above the 21-day moving average. We still are kind of low on the stochastics. We're like halfway through, so we still have the potential to keep on going up, and I'm liking how the weekly candle is looking so far. Let's head over to the daily chart, and on the daily chart, we're above the 21-day moving average, above the 200-day moving average. The 21-day moving average is crossing the 200-day moving average, so everything is looking bullish. The stochastics are low, but it kind of looks like we're about to start curving here a little bit. It's a little bit too early to tell, but there was some type of a curve here because we did go up almost to 98,000. So right now everything is looking bullish. This is a big bullish candle that happened yesterday, and right now we're wicking down from the top of the day. Isn't over. Is about 4 p.m. Eastern time, so we still have about 4 hours before the candle closes. So let's see how that ends up turning out. And if I put the patterns here, kind of have this in a flag, but I kind of want to adjust this flag now based on what's happening, and it kind of looks like a little bit more, instead of a flag, kind of like some type of a broadening wedge here. So if I'm going to change this to a broadening wedge, and now we're gonna have a new measured move, this ends up playing out. Again, my speculation is that we will be going to 99k, 100k before we do any big drop, and right now this is showing us that we might make it to 104. So let's see what ends up happening with this measured move. Now let's head over to the 8-hour chart, and on the 8-hour chart, we're bullish because we're still going up on the stochastics. We still have the potential to keep going up and maybe dragging a little bit. We do have kind of a red engulfing candle here, but we are above the 21-day moving average, and we just wicked off the 21-day moving average. So for right now, it's still looking a little bit bullish. We head over to the 4-hour chart. The 4-hour chart, we're above the 21-day moving average as well. We wicked off the 50-day moving average. The only thing is that the stochastics now are pointing down, so it's possible that we might start coming down a little bit. But now that I changed the pattern and we're kind of more of in a broadening wedge here, we have a little bit more room to play around, but still the bottom of this wedge is basically the 21-day moving average, which is at 95,229. So we want to stay above that to continue being bullish. And if we go to the 1-hour chart, we lost the 21-day moving average, but we are above the 200-day moving average. The stochastics are starting to get low, so as long as we can stay above the 200-day moving average, I remain bullish. So right now it looks like the support is going to be about 95,500. Let's take a look at the 15-minute. The 15 minutes, the stochastics are on the way up, and this kind of looks like some type of flag, kind of, but it's hard to say. Remember, today Jerome Powell did speak. It was kind of a nothing burger. He didn't really say much. Basically, he did not cut any rates. It's possible that they might do something later on in the future, but he didn't give too much information. So we did drop down a little bit, but we are maintaining above 96K at the moment. So overall, guys, I would say that, again, as usual, we must stay above the 21-day moving average and above the 200-day moving average for sure on the 4-hour to remain bullish. And we have to also maintain that on the daily to remain bullish. If we do go down, we should have support somewhere around 90K, 88K. As long as we don't go below that, I remain bullish, and I still see the potential for us to hit that 100K Bitcoin pretty soon. All right, guys, that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.